Joining us now to break down the market close and offer some insight into the companies set to release their financial reports this hour. Jeff Small, president of Arbor Financial. Jeff, great to have you back here with us today. Your big takeaway from the market's activity that we've been watching.
Oh, wow. What a reversal compared to yesterday. I mean, the coronavirus talked about upsetting the supply chains for Apple potentially. Apple drops $8, $9 a share, and today it did the exact opposite. It completely recovered. And so we're all waiting the great earnings that we expect hearing shortly. But Apple is increasing. They've been undervalued for a long time price-wise. And so we like the price action so far. We look for a positive earnings report. We look for it to continue to expand.
Of course, and investors have been optimistic leading up to today. What are you looking for specifically with Apple?
Well, I think what we're looking for specifically with Apple is, of course, to see their earnings growth. And, the average user for Apple spends about $42 a year. I wouldn't be surprised if that margin goes up. We are also looking for their units and the components that they sell to also increase between phones and iPads. Remains to be seen what they'll be sharing with us on that, but Apple recently has increased their chip orders from Taiwan Semiconductor by 10%, as well as ordering their phone manufacturers to increase their phone production by 10%. And so Apple's been one of those stocks that's been undervalued for a long time. But as we see earnings improve over the next couple of years, we're going to see the share price start to reflect the true growth potential of Apple.
Do you think, given that if we're comparing this on a quarterly basis to a quarter, this same quarter a year ago, Apple was warning because of and issuing forecasts that were actually downgraded what they were expecting going into that earnings report. And they did that in December, and ultimately, when we finally got that earnings report, they shot up afterwards because it was a relief rally. Because if we were comparing it to last year's similar quarter, do you think that we'll see an outsized jump on the stock if they do beat expectations, especially compared to what actually came in last year?
Well, that's actually the whole story as to why the stock has been running up. In the last couple of years, if we pull the charts out, we're going to see that the numbers really aren't that great. But the anticipation of the expansion of those numbers and what they're going to earn quarterly, what their total sales are going to be, looks very, very exciting going forward. They're now becoming a growth play, again, from that standpoint, combined with their user services. And so that is a pretty cool, optimistic point of view for Apple in terms of what they're going to be doing going forward.
Yeah, a growth story for a really old tech company, right? I mean, a legacy tech, not as old as some of these chip makers are or whatever, but I mean, this is still incredible to hear you say that and to call Apple a growth story, which is probably why investors are okay paying over $300 a share. And if you look at the price action of the stock over the past year, I mean, it's really come a long way. I mean, from that day where it was announced that, they were going to guide for lower revenue. I mean, the stock took a 10% decline, its steepest in, I think it was about 6 years at that point, down to about $140 range to where we are now. I mean, this is an astronomical story that Apple has been able to basically not only just ask for, all is forgiven here at this point, right? I mean, investors at this point are just like, yeah, that was fine, just a blip. I mean, now you've got a different story to tell, and Apple's been telling that story quite well.
Well, it really is. What we're looking for going forward is, 10% growth year over year with Apple. I think that's what you can kind of expect. And that is going to become the new growth story in an economy that is relatively flat going forward. And so if a company can pull out 10% improvement in earnings on an annualized basis over the next 5 years in an economy that's flat, then that's a good story to have.
All right. Jeff, just very quickly, lastly on Apple here, how big of a deal is what we were seeing them announce early in the wearables category? I mean, this has been kind of next to services, a passion for us to cover here and talk about, given the uprise and the upsurge of those devices.
Well, wearables are a pretty big dynamic for Apple. I think you're going to see wearables to continue to become very important in terms of their user base and how they utilize the wearables. So as far as the deal goes, I think it's great.
All right, great stuff.